a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
Have ETFs gone to pot? In a manner of speaking, maybe. Our ETF Research Director, Nina Mishra, is going to let us know what that all means. And so we start with the fact that marijuana stocks and ETFs have been in the news lately.
Yes, and it's been a wild ride for them because earlier this year, California legalized sale of recreational marijuana. So all those stocks surged, and after that came Attorney General Jeff Sessions' announcement about the reversal of earlier federal policy for pot.
Yeah.
But many of those stocks have recovered after that. Looking at this business, legal marijuana business,
yeah,
it's a rapidly growing industry, and there is some conclusive evidence also that marijuana helps in treatment of certain ailments. 29 states have allowed medical marijuana's sale and uses, and 8 states have allowed its recreational use, but it is still illegal at the federal level. So the earlier federal policy was to let states legalize marijuana by adopting a hands-off approach.
Right.
And that is going to change now. And because that is going to change, it has created a lot of uncertainty, and it's a big business. Sales were expected to be $10 billion in 2017,
yep,
and they are expected to hit $24.5 billion by 2021. There are so many operators, and because of this reversal of federal policy, there is a lot of uncertainty, as I mentioned, particularly regarding banking by these pot businesses. Because banks usually, they tend to follow federal guidelines.
right,
And federal guidelines say that any transactions involving marijuana are illegal. So they had little banking support earlier also, and now even the cooperatives and other smaller financial institutions which provided some financial support to marijuana businesses will have to rethink. For marijuana ETFs, another headache is that ETFs require third-party independent custodians, usually banks,
right,
to hold securities for them. And if banks are not going to be involved in any of these transactions, we do not know what is going to happen.
So the change in the law may take the luster off these ETFs and stocks.
It's possible. It's possible. There's a lot of regulatory uncertainty till we get further clarity on how federal authorities are going to proceed.
Okay, but still worth taking a look at, right?
Yeah, definitely. So there are 2 ETFs in this space. One is a pure play. Other one has some exposure to pot businesses.
Okay, this is the pure play.
Yeah. So the first one is Alternative Harvest ETF. The ticker is MJX. It holds companies which are in the ecosystem, that ecosystem. The interesting part is that it's not a new ETF. It was earlier it earlier operated with the ticker LARE, and it focused on Latin American real estate companies.
Oh.
And that was obviously not too popular with investors. So they changed their benchmark, and now they track marijuana companies. It charges 75 basis points in expense ratio. It launched on December 26, but there was so much demand for the ETF that it has already attracted more than 300 million in assets under management within this time period. And if you want to learn more about the ETF, go to the quote page for MJX on Zacks.com. You can see the expense ratio, you can see the prices and other details, and you can also go to the external homepage of the ETF sponsor, where you can see all the holdings of this ETF, some of the well-known companies you can see over here, and you can go to fact sheet also to see its exposure. You can see there's a lot of international exposure because the companies in the US many of them are not treated legal because of the federal regulations. So a lot of Canadian companies, well-known Canadian companies, are held by this ETF. It's a very new ETF, but it has done very well, as we will see.
In a short amount of time.
In the short amount of time it has been around.
Yeah. So this other one, AdvisorShares Vice ETF, actually has exposure to stocks of companies that feature other types of vices.
Yes, alcohol, cannabis, and tobacco are the three areas this ETF focuses on. This is also relatively new. It launched on 12th of December last year. So far, it has attracted about 15 million in assets under management.
Not bad.
It's an actively managed ETF, and this also charges an expense ratio of 75 basis points. And again, you can go to zacks.com quote page for ACT, and you can look at further details, or you can go to the external homepage of the sponsor to dig into further details. As you can see from here, as of now, it has 32% exposure to tobacco companies and about 20% exposure to cannabis companies, and more than 49% exposure to alcohol companies.
Okay. And if you wanted to compare these two ETFs to the S&P, what would that look like? Yeah,
so this is just a 10-day chart because both these ETFs are so new, and you can see that the pot ETF, the pure play, has surged by almost 25% during this period, though you can see that volatility after the announcement. And during this period, the other two are up just about 2%.
So now investors have to decide, do they want to get into Bitcoin or do they want to get into marijuana ETFs?
Yeah.
It's, I don't know, maybe brings them to a fork in the road. Do you own either of these two?
No.
All right. Thanks for the information. Don't forget, there is always more ETF information on our website, zacks.com. With Nina, I'm Terry Ruffalo.